I'm 85 years old, and I'm living in my car. Not metaphorically, not temporarily. I sleep in a 2004 Honda Civic in a Walmart parking lot in Tucson, Arizona. I wash up in gas station bathrooms. I eat one meal a day, usually from the dollar menu. And it's all because of a decision I made when I was 58 years old. One decision, one canceled insurance policy. That's all it took to destroy everything. My name is Robert, and I need to tell you something that's going to make you uncomfortable. I was a successful man. I had money, property, respect. I did everything right for 6 decades. And now I'm homeless. Not because I was lazy or stupid or addicted to anything, because I canceled a long-term care insurance policy I thought I didn't need. You think this can't happen to you. You think you're too smart, too careful, too responsible. That's exactly what I thought. And that's exactly why I'm sitting here at 85, writing this on a library computer during my 1 hour of free internet time, trying to warn you before it's too late. Let me take you back. 1997. I was 58 years old. I'd worked for the same engineering firm for 34 years, climbed from junior draftsman to senior project manager. My wife, Patricia, and I owned our home outright in Scottsdale. 3-bedroom ranch, pool in the backyard, 2-car garage. We had retirement accounts worth about $780,000. We had Social Security coming. We were set. Or so I thought. In 1995, my financial advisor, a guy named Doug, who I'd known since college, convinced me to buy a long-term care insurance policy. "Robert," he said, "you're 56. The premiums are still reasonable. If you wait until you're 65, you'll pay triple. And if something happens, if you or Patricia need a nursing home, this will save you everything you've built." I didn't want to buy it. It felt like a waste. We were healthy. My parents died in their sleep. Quick, no long illnesses. Patricia's mother made it to 89, sharp as a tack until the end. We had good genes, we exercised, we didn't smoke. Why would we need long-term care? But Doug was persistent, so I bought it. $3,200 a year for both of us, coverage up to $250,000 each for nursing home or in-home care. It seemed excessive, but Doug said it was smart, so I trusted him. For 3 years, I paid those premiums. $3,200 a year, gone. Money I could have invested. Money I could have used to travel, to enjoy our retirement that was only 7 years away. And nothing happened. No illness, no accidents, just $9,600 thrown away on insurance we didn't need. Then, in 1998, the insurance company sent a letter. Premiums were going up, not by a little, by 40%, from $3,200 a year to $4,480 for the same coverage. I was furious. I called Doug. "They can't just raise it like that," I said. "They can," he said. "It's in the fine print. Long-term care insurance companies have been underestimating their costs. They're all raising premiums. So I'm supposed to just pay it? Robert, you're 58. You've already paid in for 3 years. If you cancel now, you lose all of that. And if you try to buy a new policy, you'll pay even more because you're older. Or," I said, "I could save the $4,280 a year and invest it myself, build my own long-term care fund." Doug was quiet for a moment. Then he said, "That's a gamble, Robert. What if something happens before you've saved enough?" "Nothing's going to happen," I said. "Look at us. We're healthy. We're active. This is a scam. They got my money for 3 years and now they want more. I'm done." I canceled the policy the next day. Patricia wasn't sure about it, but I convinced her. "We're throwing away $4,500 a year on something we're never going to use," I said. "That's $4,500 we could put toward the Europe trip you've been talking about." She wanted to go to Europe, so she agreed. For the next 7 years, I felt vindicated. We didn't need the insurance. Nothing happened. We both retired at 65, healthy and happy. We took that Europe trip, 3 weeks through Italy and France. We visited our kids, spoiled our grandchildren. We lived exactly the retirement we'd planned. I invested that $4,500 a year I'd been wasting on insurance, added it to our retirement accounts. By the time I was 65, our nest egg had grown to $920,000. We were doing great. Then Patricia started forgetting things. Little things at first. She'd forget where she put her keys. She'd tell me the same story twice in one day. She'd go to the grocery store and come home without the one thing she went there for. I brushed it off. We're getting older, I said. Everyone forgets things. But it got worse. She forgot our daughter's birthday. She got lost driving home from the bank, a route she'd driven 1,000 times. She left the stove on twice, nearly started a fire. At 67, she was diagnosed with early-onset Alzheimer's. The doctor was kind but direct. "It's going to progress," he said. "She'll need increasing levels of care. Eventually, 24-hour supervision." "How long?" I asked. "Could be 5 years, could be 15. Every case is different." I took care of her at home for the first 3 years. I learned to hide the car keys. I learned to check the stove 10 times before bed. I learned to answer the same question 15 times without showing frustration. I loved her. I'd promised in sickness and in health. I could do this. But at 70, Patricia wandered out of the house at 3 a.m. I woke up and she was gone. I found her 6 blocks away in her nightgown, confused and crying. She didn't know where she was. She didn't know who I was. The police officer who helped me get her home said, "Sir, you need help. This isn't safe for her anymore." I knew he was right. I couldn't watch her 24 hours a day. I was 70 years old. I was exhausted. I was terrified she'd wander into traffic or fall or hurt herself. I hired a home health aide, $25 an hour, 8 hours a day, $200 a day, $6,000 a month. Our retirement income was about $4,800 a month from Social Security and pension. The aide cost $6,000. We were losing $1,200 a month. I had to start withdrawing from our retirement accounts to cover the difference. After a year of the home aide, Patricia needed more care. She was combative sometimes. She'd hit the aide. She'd refuse to eat. She needed someone who knew how to handle advanced Alzheimer's. I found a memory care facility. Nice place, good staff, specialized in Alzheimer's patients. $8,500 a month, $8,500 a month, that's $102,000 a year, and our income was $4,800 a month. I was withdrawing $3,700 a month from our retirement accounts, $44,400 a year. Our nest egg of $920,000 was bleeding out. Do the math. At that rate, we had about 20 years of coverage. That seemed like enough. Patricia's doctor said most Alzheimer's patients don't live more than 10 years after diagnosis. We'd be fine. But Patricia lived longer than that. She lived in that facility for 12 years. 12 years at $8,500 a month, that's $1,224,000. We didn't have $1,224,000. Nobody does. So here's what happened. The retirement accounts ran out when Patricia had been in the facility for 7 years. $920,000 gone. Every penny I'd saved over 40 years of work, gone. I sold the house, our beautiful home we'd owned for 30 years, $340,000 after paying off the small mortgage we'd taken out for repairs. That bought another 3 years in the facility. Then that money ran out too. Patricia qualified for Medicaid by then. She had no assets left. I had no assets left. They moved her to a Medicaid facility, not the nice memory care place, a nursing home that smelled like urine and despair, understaffed, underfunded. But it was all we could afford. It was all that was left. She lived there for 2 more years. She didn't know who I was by then. She didn't know who she was. But I visited every day. I held her hand. I told her I loved her. I told her I was sorry. Sorry for what? For canceling that insurance policy when I was 58. Do you understand what I'm telling you? If I had kept that long-term care insurance, it would have paid $250,000 toward her care. It wouldn't have covered everything, but it would have been enough to keep the house, enough to keep some of our retirement savings, enough that when she died, I wouldn't have been left with absolutely nothing. But I canceled it, because I thought I was smarter than everyone else, because I thought we'd never need it, because I wanted to save $4,500 a year. $4,500 a year for 7 years before Patricia got sick. That's $31,500. I saved $31,500 by canceling that policy. And it cost me everything, the house, the savings, my entire future. Patricia died in that Medicaid facility in 2022. I was 83. I had $1,847 in my bank account. No house, no retirement savings, just Social Security, $1,450 a month. Try living on $1,450 a month. Try finding an apartment on that. In Tucson, the cheapest studio I could find was $850 a month, and they wanted first, last, and deposit. I didn't have it. I had nowhere to go. My daughter Rebecca lives in Denver. She has 3 kids, a small house, barely making it herself. She offered to let me stay with her. Just for a while, Dad, until you figure something out. I lasted 4 months. 5 people in a 3-bedroom house. I slept on the couch. I tried to help, tried to stay out of the way. But I could see the strain. I could hear Rebecca and her husband arguing about money, about space, about how long I'd be there. I left, told them I'd found a place. I hadn't. I'd found a Walmart parking lot that didn't kick out overnight cars. That was 2 years ago. I've been homeless for 2 years, at 85 years old. I shower at the rec center when I can afford the $3 day pass. I eat at soup kitchens. I go to the library during the day because it's air-conditioned and I can sit somewhere that isn't my car. I sleep in the Walmart parking lot because it's lit and feels safer than dark streets. Last winter, I got pneumonia. Sleeping in a car in the desert, you wouldn't think you'd get pneumonia, but the nights get cold. I ended up in the emergency room. They stabilized me, gave me antibiotics, sent me back to my car. You need rest and warmth, the doctor said. I laughed. Where was I supposed to find that? My son David knows I'm homeless. He lives in California, works in tech, makes good money. He sends me $200 a month. It helps. But he has his own family, his own mortgage. He feels guilty, I can tell. But what can he do? Move me in? He has a 2-bedroom condo. Here's the question that haunts me every single night as I try to sleep in the back seat of my Honda. What was I thinking? I was 58. I was healthy. I was successful. And I thought I knew better than the experts, better than the insurance agent, better than my financial advisor, better than the statistics that show 1 in 2 people over 65 will need long-term care. I thought I was special. I thought my family was special. Good genes, healthy lifestyle, we'd be different. We'd be the ones who die peacefully in our sleep at 90, never needing help, never being a burden. But we weren't special. Patricia got Alzheimer's at 67, and it destroyed us. Not because Alzheimer's exists, because I canceled the one thing that would have protected us from financial devastation. $4,500 a year. That's what I couldn't stomach paying. That's what seemed like too much. That's what I convinced myself was a waste. Let me tell you what a waste actually is. A waste is being 85 years old and homeless. A waste is watching your wife die in a facility you can barely stand to visit because it's so depressing. A waste is losing everything you spent 40 years building. A waste is sleeping in your car and wondering if you'll die there. That's waste. But here's the second question, and this one's even harder. Who was I before I became the man who thought he knew everything? I used to be careful. My father taught me to be cautious, to plan ahead, to expect the unexpected. Robert, he'd say, hope for the best, but prepare for the worst. Somewhere along the way, I stopped preparing for the worst. I got comfortable. I got confident. Success made me arrogant. By 58, I'd been employed for 36 years straight. I'd never been laid off. I'd never had a major financial setback. I'd invested wisely. I'd bought property. Everything I touched turned out okay. So I started to believe I was invincible. I started to believe that bad things happened to other people, not to me, not to us. We were different. We were smarter. Young Robert would have kept that insurance. Young Robert, fresh out of college, scared and uncertain, would have paid any premium to protect his future. He would have listened to the experts. He would have erred on the side of caution. But 58-year-old Robert was cocky. He thought he'd figured out the system. He thought insurance companies were scams. He thought he could self-insure, invest the money himself, come out ahead. And technically, mathematically, if Patricia had never gotten sick, I would have been right. I would have saved money. I would have been the smart one. But life isn't a math problem. Life is chaos and uncertainty and things you can't predict. And insurance isn't for the probable outcomes. It's for the improbable ones that destroy you. I forgot that. I forgot who I used to be. The careful young man became the arrogant, middle-aged man, and the arrogant, middle-aged man destroyed the old man's life. The third question is the one that keeps me up at night. The one I ask myself every time I see my reflection in a store window and barely recognize the homeless man staring back. What was I willing to sacrifice to be right? Because that's what it was really about. I wanted to be right. I wanted to be the smart one who didn't fall for the insurance scam. I wanted to be the guy who beat the system. Doug told me to keep the policy. Patricia wasn't sure about canceling it. My sister warned me, said her husband's father had a stroke and the long-term care insurance saved them. But I knew better. I had to be right. And being right was more important to me than being safe, more important than protecting my wife, more important than securing our future. I sacrificed everything to be right, and I wasn't even right. I was catastrophically wrong. If I could go back to 1998, if I could talk to 58-year-old Robert, here's what I'd say. Pay the premium. Stop being arrogant. Stop thinking you're smarter than everyone else. $4,500 a year is nothing. It's $12 a day. You spend more than that on golf. You spend more than that on restaurants. Pay the damn premium. But I can't go back. None of us can. All I can do is tell you what happened and beg you not to make the same mistake. Last month, I ran into Doug, my old financial advisor. I was coming out of a soup kitchen. He was going into a Starbucks across the street. He didn't recognize me at first. Why would he? I'm not the well-dressed engineer he used to know. I'm an old homeless man in clothes from Goodwill.